I don't believe that we make money on good valuations, meaning low, or I don't think that founders make money by good valuations, meaning high. I think that we both make money by owning a lot of really big things. And the best way to do that is by just running an awesome, tight ship that grows really efficiently and doesn't need to raise constantly.
Representing Franchise Secrets, Erik Van Horn. Yoni, welcome to the show.
Good to be here, man. Thank you for having me.
I'm excited to talk to you. I know some brands that have had some that are VC backed, or they have some VC funding, and then I got introduced to you, who that's your world. And so VC and franchising
Yes.
is not a topic that we get to talk about very often. So looking forward to this. Why don't you give the audience a bit of your background?
Yeah, for sure. So, I'm a principal at Slow Ventures. We are a seed and pre-seed fund. I sit in New York. The team is based in San Francisco, Boston, and New York. In total, we're about a $900 million AUM firm, and we like to back, really ambitious founders building for big markets with innovative concepts um, in some of the kind of weirder, wilder, more out there corners of the world. Um, we have for a long time been really interested in this idea of how do we empower long tail entrepreneurs? How do we get software out into the real world? How do we scale up innovative concepts? Um, and the more you push on those questions, we just keep on coming back to like franchising has so much figured out. It's such a beautiful business model. It's such an efficient business model. And it's so poorly understood in our world and our community. It's been really fun to learn from people like you and your audience to try and both find new things to back and help our founders think a little bit differently than some of their peers.
So I was thinking, franchising is really attractive to a lot of private equity. And then
Yeah.
you've got different VCs that fund at different stages, private equity that comes in at different stages. Why do you think that there are not as many VCs that are interested in franchising? Like, what got you interested in it, and why are
Yeah.
others not as interested?
So much of what we do is thinking in these two separate steps. And the first is how do I create something really valuable? How do I build a product or a system that works and is worth scaling? And then there's a second question of how do I scale it? How do I create value? How do I capture value for myself? Um, and we have come to see franchising and franchise inspired businesses as this really awesome way to scale up something that works, to scale up a system, to bring IP to market in a way that just feels so much more efficient. And so it's so much better built for scale. The kinds of founders we back, they're really good at brand. They're really good at demand generation. They're really good at technology and product and system thinking. What they're not so good at is, hey, how do I site a location? How do I know the most about my market? How do I go out and hire the 20 people I need to staff it up? Those are really, really different skill sets. And so we have really fallen in love with the idea that like you don't need to be good at everything all at once. We can be a lot more successful if we let our founders focus on the things that they are really, really good at, that they're uniquely talented and capable at. And then there's a whole wide world of operators who are really good at the other stuff. So let's find ways to partner with them. And franchising is just a phenomenal way to do that, where you have this beautiful division of labor. Everyone does the thing that they're best at. Um, and these businesses can grow really fast and be really profitable. And ultimately, that's the only thing we care about. I don't care if it's, you know, buyouts, franchise, and software, whatever. We want to see things that can grow really fast and be really profitable.
So you probably caught the attention of all the franchisors out there, because franchisors usually need more money. And then
Yeah.
I have conversations with new founders all the time, and they're always looking for capital because as a new franchisor, it's not like you are swimming in cash flow. It's like it's
Yeah.
very front end loaded and it's beautiful on the back end, but it's a lot of work and takes a lot of capital to get to a point where
Yep.
the franchise is cash flowing for the founder. And then even then you're just always building more, especially in retail. Retail, it takes a long time there's a lot of front end work for the franchise or to do, helping them find real estate, do the build out, do grand opening, service base. It happens right away. So it's even longer for retail based franchises to really start having the money come in. So if there's founders out there that are thinking, boy, I'm interested in raising some money, what do you say to that founder?
So I think we're going to look at a franchise the same way we're going to look at any other startup, which is there's a couple of questions to ask and answer in the short term. You know, are you doing something that feels really unique? Are you doing something that feels like a quantitative story? Can we answer to ourselves, hey, here's how we're going to earn differently? Here's how we're going to have a hypothesis that we're going to test. And then the longer term question of here's how this gets really big. Here's why we believe this can be a really big concept. So we love these kinds of businesses. We're really interested in meeting and supporting and backing these founders. We also know that there's, you know, we're bringing a new type of capital to this market, and that is not going to be for everyone. The deal that we're going to make with people isn't always going to be the right fit. We need to see a path to build really, really big, multi-thousand unit brands. We need to see a path where we're saying, um, we have like testable hypotheses. Oftentimes, those are centered around things like automation rather than just saying you know, we're going to build like the best brand. We're going to have the best, I sometimes joke, like we're going to have the best chicken sandwich. It's really hard for me to look at that idea on paper and say like, oh, sure, I trust that you're going to have the best chicken sandwich. Here's $5 million. As opposed to saying, one concept that we backed, it's a robotics company. It's a robotics company that in years past would have just said, hey, we're going to open 1,000 units on our own. And when we met that founder, he gave us like a peek behind the curtain. He said, I'm going to tell you guys something that I never tell VCs because they all tell me they don't care and to shut up and they're not interested in hearing about it. He said, it's like literally treating this like a state secret. He's like, I don't actually want to open all the units myself. This is a robotic food company. It's like, I actually kind of have been toying around with this idea of maybe doing it as a franchise. And our eyes lit up because what that said to us was like, this is a guy who's being really, really smart about what he's good at, what he's uniquely capable of, and then all the other things that he wants to partner with other entrepreneurs on. And this is a concept that we think like just rips a ton of the cost out of running this business by moving to this robotic system. We think it builds a great brand. Consumers are really excited about buying like robotically grown food. The concept is called that Area 2 farms. And that was something that we felt like, hey, we can see the first unit that he's running on his own. It's sort of a proof of concept. It's small scale, but like we can see something and we have a story that we can tell around, why this is economically valuable beyond just the brand. And we have a story about how this can open, 1, 2, 5,000 units and be a really big, important public company in the US.
Attention, franchisors and franchisees. There are 2 really important resources that I want to share with you that will help you avoid costly mistakes and increase your enterprise value. The first is our free Facebook group. It's a community that has over 4,000 franchisees and franchisors in it. When somebody asks a question, they get honest and authentic answers from multiple perspectives. You can join the group for free over at franchisesecrets.com/Facebook. The second resource I want to share with you is if you're a franchisee and you want to be around a community of successful Zs and other brands and in other industries, this is why I created the Franchisee Mastermind. If you want access to the best single and multi-unit owners to know what they're doing, or if you want to be around other multi-brand owners, then you'll want to check out my Franchisee Mastermind. The reason why people join is they want access to my Rolodex, my connections, to each other. They want a shortcut success, both short-term and long-term. Links will be in the show notes or at scalablefranchise.com. So one, the brand needs to be able to scale quickly. It can't be the founder that says, I'm just going to do a few units a year or a handful of units a year and never going to sell. Like, these businesses are going to sell, have some type of liquidity event in a certain time frame. What kind of time frame do you look for some
I
type
mean,
of
look,
liquidity?
we're called slow ventures for a reason. Our belief is that big things take time. We don't want to hack that process. I don't think you can build healthy businesses by just hacking it and cheating and cutting corners. You can maybe do something quickly, but you can't do something durable. And what matters is building something durable that will outlive you and will be a long-standing important company. Um, so our timeline to liquidity ever is 10 to 15 years. It's long. We are not looking for quick flips. We're not looking to hey, we'll put in $1 million and 2 years later you'll sell it and give us back 3 million. Like, that's not that interesting. It's more about going further. And we see our capital as a way to pull forward some of the experimentation, pull forward some of the risk taking, so that the most ambitious, forward thinking people can have the resources to support their vision.
I think one of the challenges that you probably are trying to solve for all the time, at least we're trying to solve for at Front Street, as we talk to new brands and wonder who we're going to work with next and who's going to become a portfolio brand, is the founder. Like, the founder is such an X factor. You need everything that you just mentioned in the brand. And so many founders think they have something special because it's better, it's the best, it's better than this, or my territories are bigger. That's a unique factor, when a lot of the things that they think are unique are really not that unique. And sometimes I'm talking to brands and we're like, they're telling us all this stuff that is really not that unique. And then all of a sudden they make some comment, off the cuff. And we're like, that's it. Like, that's what makes you different. And we can get behind that thing. But that's, talking to these founders and they just don't know what they don't know. I've seen some of them just not have very good leadership skills. They got good leadership to have a multi-unit small business. And I just did a podcast on this, just a solo one, talking about that a little bit. But these founders really good, making million, $2 million a year, having 3 to 5 to 6 to 10 units of something, and then they become a franchisor, and it's just it's a different animal. So with all that said, when it comes to founders, like, what do you look for in founders?
So I think number one, we see it as the point of our money is to help like unlock people's ambition, and so that means that they need to have that ambition, from the jump. Exactly like you said, there are people who and no disrespect meant to this, like there are people who want to build something small for themselves, and that's awesome. That is like a really cool and powerful thing, and like all power to you. I would love to own a cash flowing, couple $1 million business. But we do really want to select for sort of world eating ambition. Um, we want to select for people who are, I think, have sort of high energy and charisma. So much of this job really does come down to selling. You need to sell talent to recruit them. You need to sell investors to raise money. You need to sell partners to actually move units and sell the franchise. Um, the third, I think, is managerial skill, like just the ability to actually execute. So who are the people who are just really ruthlessly focused on all of the the nuts and bolts of execution? Who are the people who they are, you ask them any question about their P&L and they know the answer off the back of their head because they study this closely every morning because they're up late at night obsessed. um and then I think finally it's the people who I think have this quality of like understanding what building for scale means, um where you have to build something that can go beyond yourself. um you know you have to be able to design a system built for scale that you can hand off to other people. And some people really believe, and it's this complicated balance, that like that their own skill is enough to compensate for flaws of the system. And in this business, that I just don't think that's true. So that means that these are really long processes. These, it takes, if you're gonna building out the SOPs, it takes a really long time. You have to be someone who can simultaneously be thinking on the 10 or 15-year arc and like imagining the company they're going to take public, but understanding how every single choice they do today pulls that vision forward or pushes it back. So I think it's a really rare combination of vision and ambition and skill and charisma that is hard to find. And it's the reason why you know we are not out here it's not an open door policy where anyone who comes in and has a nice deck, that's a check. um I think these things are hard. I think it takes really exceptional founders, um and we're just determined to find them wherever they are.
Yeah, sometimes I think, I'm like, I'm a unicorn hunter. I'm hunting for unicorns
Yeah,
out there, and
yeah,
it is
exactly.
it is not easy. How often do you find an amazing founder, not a great concept, and vice versa?
Yeah, great founders are absolutely necessary to build great businesses. Nothing will be successful without an incredible founder and an incredible team around that founder. But great founders can also pursue the wrong idea. It's not good enough to say we have a great concept, and it's not good enough to say I'm a great team. You always need both. And so we meet people all the time who feel really exceptional to us, and we think they're either not pursuing the right idea or they're not pursuing the right idea in the right way. Um, and if we come in early enough, we're really happy to try and convince them of that and say, hey, like, it's not our job to tell you what to do, but we can maybe tell you what not to do. We can maybe try and steer you and push you and say, like, and challenge you. And sometimes really awesome businesses get built out of that process. And when we're working, again, early enough in the process, and when we're working, with people who are really like um, open-minded and willing to think critically with us, sometimes beautiful things happen out of that, just arguing and am I allowed to swear?
Of course.
Okay, great. And just calling bullshit on each other and yeah, so we love that process, but it's both. Anyone who tells you I have I'll just hire someone else to run it, like, it's not going to work.
They can't make the right decisions too, right? I mean, you need a founder that can be good at leading and making the right decisions. And I've seen, the leadership lid where they just don't have the operational chops or desire because they're more of a founder. And if they don't recognize that and put in that second in command, that COO or brand president, that really stifles franchisee growth from numbers to
Yep.
the franchisees' revenue and profits.
And and it takes people who I think are mature enough, to recognize what they are and are not good at. I think it's a really common failure path for people who are great founders, but ultimately maybe not great CEOs and struggle to build teams around themselves that to support them because, like, I'm too insecure. I'm not willing to say what I'm good at and not good at. And for us, that is frankly a situation we just want to avoid. Like, we need to work with people who have really great teams that feel like they're built for scale. Sometimes we can find that in a single founder. Often that is going to need to be, a founding team.
Yep. All right, let's talk about the nuts and bolts of like
Yeah.
raising money. And you can use
Hmm.
specific examples if you want, or just kind of be more
Sure.
generic with VC in general. But these founders they're wanting money, and
Yeah.
they probably have a higher valuation on their franchise with 0 units or 5 or 10 units than what it's really worth. But also, if it explodes and in a few years, it's going to be worth a lot more very quickly. So how do you or how does someone put a valuation
Yeah.
on a brand, or is it more like a convertible note or something like that?
Yeah. So look, we'll do convertible notes, we'll do safes, we'll do, we'll put valuations on stuff. But I think in the end of the day, there's it doesn't matter what type of business you're looking at. There's really, a couple of things that you just have to align, which is across, across like capital, how much you want to raise and spend, the valuation, the price you'll raise it at, the inputs, what you've done and proven to date, and the outputs. What are you going to do with the money? And each of those things has to just be able to align with the others, and I can sort of run through the list of how this works, but like the capital and the outputs are the efficiency. The capital and the valuation are the dilution, so on and so forth. And so I think we just have to be able to have an adult conversation about like, what have you actually proven to date? What do we know versus what are the things that we think and believe? And the more that we know, the more comfortable we are, paying a higher price. Um, the more that we are, how much money can you even efficiently spend? There are businesses often where they're really at these exploratory phases, and they might come in and say, I want $10 million, and the answer is like, well, do you really have a plan for how to spend more than like two? Because if you can't spend it efficiently, you're just going to spend it inefficiently, and that's not good for us. That's not good for you. So I wish I could tell you that there's some super easy answer of like, oh, take the one, carry the two, 10% of this and 5% of that. It just doesn't work that way. The real answer is like, we have to be able to have an adult conversation. We have to be able to be fair. And we have to remember that like the way that we get paid is not by taking your company away from you. We are minority shareholders. We want to empower founders to go and build something really big. Um, and it just comes down to alignment. So I wish I had some really awesome, snappy answer for you of like, here's the secret of how to do valuation, and there just isn't one. Um, what I will say is, I don't believe that like we make money on good valuations, meaning low, or I don't think that founders make money by good valuations, meaning high. I think that we both make money by owning a lot of really big things. And the best way to do that is by just running an awesome, tight ship that grows really efficiently and doesn't need to raise constantly.
So
Uh,
what's the
so I
founder's?
don't think there's shortcuts.
No, that makes
Yeah.
sense. It's not a short, snappy answer that everyone was hoping for.
Yeah.
Uh,
How about this? How about this? 10. Is that better? Every business, 10.
10, 10. That makes perfect
10
sense.
what? I don't know. Just
Yeah.
10.
Yeah. $10 for 10%. Maybe.
Yeah. Great. Yeah.
The owner has to have the right mindset though, right? I mean,
Yeah.
it doesn't matter what that number is really. It matters what happens, 10 or 15 years down the road. That's what everyone's playing for. So what do you want that? When do you dismiss, and that might not be the right word, when do you dismiss a founder, like they're not ready with the right mindset, or maybe this isn't the way that they want to grow? And what's the mindset of a founder that aligns with the type of growth and terms that you have?
So I think one of the most important things that we look for in any kind of founder, but definitely and especially in franchising or similar, is like people who are really obsessed with value creation and really understand that the important thing is not scale for its own sake, but building something that's worth scaling. And so what are the tests and what are the experiments that you can design as a founder to demonstrate that what you're doing is valuable, that it even matters, that anyone even gives a shit if you have 100 units? Because having 100 units is some worthless concept. Like this is like, the Subway sandwiches story. Like these are units that are not profitable. They're really good at selling the units, but they're like, it's not an awesome brand. It's not an awesome concept. You won't make money owning one. So we care a lot more about saying like, I have this idea. I think here's why I think it will be valuable. Here's how I'm going to know. And what we want these things to turn into is just money machines. We want the owners to be able to say, I know if I put something in, I'm going to own this awesome cash flowing asset on the other side, and I can operate it with a lot of confidence. It's not going to fail. I'm going to have the support. So building the infrastructure and building the value to then go and figure out how to scale it. That's, I think, the number one most important thing. We see people all the time who are like, if I build it, they will come, or, um, I'm just really good. I'm just really good. And like, I'm smart, so it'll all work out. Or, hey, like, I see how I could do this as a quick flip. And those are all sort of disqualifying answers for us, pretty much right off of that.
So when you're investing, do you prefer to invest alongside other VCs, or do you prefer to be the main
I mean,
check
we would
writer?
love to. There's no one else doing this. There's no one else doing this is the real answer. There's probably like a handful of other venture funds who will do early risk capital into franchises. There's a much longer list of people who will do it into like sort of business in a box companies or software for franchises, which we do as well. But there's a very short list of the people who will actually back the concepts directly. So we'd love to do it with other VCs. They just don't understand how to do it. They don't care. We get calls all the time from other VCs who are like, "Hey, like my buddy is doing this thing," and I mean, this is a real example. We backed a business um, called Outfit. It's an outdoor personal training brand. Super legit founder. This guy Randy. He was the founder of TRX before. Like he understands his market really well. He's built a big fitness brand before, um, and we got to it because another venture capitalist met him and was like, "This dude is awesome. This dude is like an absolute killer. I can't do anything with it. Do you guys want to do it? I can't invest in something like this." So we get those calls all the time. Um, we when we're doing it, we're often not bringing in other VCs. We do when we can, we certainly do, but we're more often we're bringing in maybe angel investors from the industry, or we're bringing operators from bigger brands, or we're bringing in some of the consultants or something. We're going to write checks directly into the business. So we want to do things with friends and with partners. It's not always venture capitalists who we partner with.
So what is the difference between an angel investor and what you do?
Yeah.
I'm guessing you're talking about more friends and family type angel.
Yeah, exactly. So these tend to be maybe like execs who either have sold a business or made money from a prior company, um, and they have the bank account now to do the you know 50K check, the 100K check, the $25,000 investment, just off their own personal account. And those are really great people because even if the dollar amount isn't super high in a way that kind of moves the needle for the company, getting those people around the table and being able to have them as thought partners and collaborators can just be super valuable for founders and for us.
Do they come in at similar terms as you as the VC? How does that work for an angel
Yeah,
investor?
yeah, yeah. We're not looking for special deals. We're not sharky. We're not sharp elbowed. If we're putting around together, everyone who's doing it, they're all taking the same risk. We all should invest on the same terms.
Yeah.
No,
That's
I think that life is long, and it's really short-sighted to try and nickel and dime people, or create special carve outs. And that's true with the people we invest with, and it's true of the people we support as entrepreneurs. Like we're looking to do things that feel fair and can sustain over a decade, not quick little hacks.
What do you guys do beyond capital? Because a lot, it might be capital and that's needed. It might be introductions, like you were kind of saying, or access
Yeah,
to more capital, which is very valuable. Like beyond the
yeah.
capital, is there anything else that you guys do to help?
So this is a great question. It's really straightforward. It's three things. Number one, we give you money. That is by far the most important thing we will ever do for any founder. Um, I think I'm a great hang. We'll go, we'll get a beer, we'll shoot the shit, we'll talk about ideas. The money is absolutely the most important thing. I think that's true of basically any investor. Um, and number two is we will help you get more capital. We think we're good at thinking about financing and thinking about capital markets, and we know who the right people are for you to talk to next. And then the third is like helping you think about how to spend the money. um, every decision that you make as a founder is an investment decision. Can we help you sharpen up your skill set as an investor to make those decisions better and with more confidence? So it is those three things. It's give you money, help you raise more money, help you think about how to spend the money. And part of that is it's just how we operate as a team. We're a small team. But also, I think there's it selects for a certain kind of founder where the people who come to us and they're like, I don't know what to do. Can you help me? Can you hop in and help me like fix something? Like, I don't know that those are the people we want to back. Um, we make 15 investments a year. It just doesn't work for us to go in as fractional executives into all of our companies. This is part of the deal of minority capital is if you want that, if you want that level of hands-on support, you should raise from private equity. They're going to take, you know, 50% of the business and you work for them and they will like really help you drive the ship. We want to back people in a different, we want to back a different kind of person in a different way. And it's the really high agency, ambitious founders who can figure it out for themselves. And they just need the money to help unlock the ideas.
So you're talking about helping the founders, the team spend money. Where do you see
Yeah.
founders going wrong with that?
So in this category, I think one place that we see it is um, I'm going to just go and open a ton of corporate units because it's faster, which is fine. It's not a bad answer, but I do think that if you're ultimately trying to build something really big versus build something really fast, it has to come from franchising. It has to come from selling units. And I think people can get caught up in, hey, if I just open two more corporate units, like that'll be great. I'll double because I only have one unit today. Or hey, I have five, I'll open five more and I'll double. And the problem with that is that type of approach will just run out of steam. It will hit a ceiling. So I think being able to try and have intelligent conversations and like logical conversations around what are we really doing here? What's really the point? Because the point is not to get to 20 units, it's to get to 2,000. And so if we can keep our eye on it might be a slower, longer term prize, but keep our eye on that prize of like real scale. I think that is a conversation that we have all the time. How do you set yourself up for real scale, not short term success?
What are some smart places that founders should be thinking kind of ahead as they're growing, where they should be
Yeah,
putting that money? Like whether it's people, it's
yeah.
training, it's technology, like what are some of those?
So I one of the reasons that we're so excited about this whole category is we really do think there are incredible opportunities to either build or use technology in new franchise concepts. So I think founders should be thinking about that from the jump. And that is a great reason to call us is, hey, maybe I raised a little bit of money or I did it myself or like I can run the units, but what I can't do is hire the 4 software engineers to like build the system or to build the platform. And that's a great time to call slow. Um, I think that across things like, SOP compliance and communication with frontline workers and observability and, like customer facing portals and communications, there's so many places to build software, to build or use software that make these businesses, I think, produce a better experience for the customer, to produce a better experience for the owner and operator, to attain and train and manage employees better, and ultimately to build a much more profitable business. We see a whole universe of things that software companies have figured out how to build, but have done a really poor job of selling that we think actually will originate inside franchises. So, for instance, things like payment acceptance. Um, there are a lot of opportunities to turn, this cost center, like, hey, every time a customer comes in, I lose 3% to payments. You know, if you're willing to plan and build, you can become what's called a payment facilitator and actually start to win some of that revenue back. Maybe you share it with your franchisee. Maybe the franchisor takes it. Like, who knows? But the point is, you've created new margin out of what was before a cost center. Same thing. We have a business called Authentic Insurance, and they are doing business insurance for small businesses. And one of their biggest customers, or one of their biggest group of customers, is franchisors. And so they're going to the franchisors and partnering and creating this new insurance product that actually passes commissions back to the franchisor. So again, like, this is an example where you need to be thinking about product in a bigger sense, beyond just the product that your customer sees, but really the product that your franchisee sees. And you can start to suddenly take all of these areas that either were cost centers or operational drags and turn them into revenue draggers. So the traditional model of, hey, 7%, royalty and 2% marketing fee, we're starting to see opportunities where we could maybe grow our like effective take rates, our revenue share on gross receipts, 15%, 20%, through these types of strategies of turning these cost centers into revenue drivers and pulling more of the product into the arms of the franchisor. So same thing goes for things like payroll, things like vendor management. All of these are really interesting opportunities that we want to help our franchisors back.
And all these things, you can have a better margin for yourselves and at the franchisor
Yes.
level, and it's not hurting the franchisees versus a
Yes.
franchisee just making more money by charging more fees.
Yes, exactly. What we want to see is value creation, not just I'm going to take it.
Yeah.
If we believe that if you build a really profitable, like smooth system, the rest will follow. We're not interested in people who just say, I'm just going to charge you a really high royalty because I can.
Yeah.
That's, I think, a fine answer. That's not creating something new. That's just taking more of it for yourself.
Yep. 100%. All right. Anything else before I let you go? Anything that I didn't ask, should have asked, that you think the audience of franchisees, buyers, and franchisors would want to know about VC that I didn't get to?
Yeah. Well, I'm going to put it back to you. Like, what do you feel like I am getting wrong here? Like, you've been a great host. You've been very polite to me. Like, when you hear me talking about this, like, does this smell like bullshit to you, or does this feel like something that we might be really onto something?
I think you're onto something. The founder's the X factor. You guys don't have the time to invest into that founder making the right operational decisions, and that might be kind of the weak link in what you have. But you're not private equity. You have different metrics to success because you're the size of checks that you put in, and it's a numbers game. It's a numbers game for everybody, but the numbers game is wider for you guys. So if you like wanted to set yourself up for greater success, I think these founders need more because they're just not used to being a franchise. Or the fix for that is, working with somebody like us at Front Street. The other fix of that is having them hire people from franchising that have a reputation and have the reps and the experience within franchising to be able to help that founder make really good decisions, to see around corners that they can't see because they just don't know. So, but that's a selfish answer because that's what we do all day long. So that's why, I don't know how helpful that is.
No, but I think it's hey man, we're all talking our books. Always. Everyone's got something to sell. But no, I think you're right. There's a reason why we're interested in doing these checks and making these investments, but we've done a fairly limited number of them. We do think that it takes a really special circumstance of a different kind of founder, and they're hard to find. And we totally acknowledge that. So like, I asked you, hey, what do you think our weak spots are? What do you think our blind spots are? And you absolutely nailed it. Like 100% right. I have no disagreement with you whatsoever.
Well, dang, we're going to have to get on sometime and have some disagreements, have some fireworks, and have some fun.
You need to be like 10% dumber, or I need to be, 10% meaner or something. And then maybe we can misunderstand each other and it can turn into an argument.
This would be fire. So, Yoni, thanks for coming on, man. It's good getting to know you.
Yeah, thanks a lot, man. It's great to meet.
Thanks for listening to the Franchise Secrets podcast. Links to everything can be found over at franchisesecrets.com. And if you want my help with anything from starting your own franchise to growing your current franchise business, please visit scalablefranchise.com.